German CPI worse than expected, retail sales down and unemployment figures missed the beat. Will it be Europe's wonder economy which pushes the hand of the ECB to provide further stimulus? Theo Vermaelen joins me down the line to discuss this and more. Theo, so no big change on the headline data really, but the margins show a bit of disappointment, and combined the latest trilogy of data does not show a positive trend. Is it enough to materially dampen confidence regarding the German economy moving forward? Do you think Draghi will have to act?
Well, I think that people should not pay too much attention to these short-term measures of performance, which are typically backward-looking. I think the best indicator about what's going to happen in the future is to a little bit look at the stock market. And indeed, the stock market has gone down significantly last quarter, the first time since 2011. So that tells you that there are some dark clouds on the horizon, not only for Germany, but for everybody else. And the causes are well known: the decline in Chinese economic growth, and also the collapse in commodity prices, which affects the financial health of many companies in emerging markets. And I don't think there's much that Mr. Draghi can do about that.
Indeed, but focusing on unemployment for a moment, analysts were looking for a net drop of 5,000, but we have seen a rise of 2,000. It's not a huge miss, but might its importance garner impetus as Germany and neighbours try to decipher the potential scope and impact of handling the ongoing migrant crisis?
Yeah, I think the migrant crisis, I think in the short run, of course, it could be a negative effect that all these people enter the labor market. But in the long run, I think it will be good for Germany, because Germany needs immigrants. They have the problem is with their demographics, that the supply of people in the labor market is going down. And that's why I think it's not always good that the unemployment rate goes down. If the unemployment rate goes down because fewer people want to work, I mean, that's not a good thing for economic growth. So that I think that's this immigration thing may be a short-term issue, but in the long term, it will be good for Germany.
Another threat has been that of the Volkswagen emissions scandal. Some say the economy has been hit at the core, while others say the impact should not be exaggerated. To your mind, how far-reaching could this scandal be? Is it a game changer?
Well, obviously, this seems to be confined to Volkswagen itself, and there will be maybe a decline in demand for Volkswagen diesels. But I think people in general still think that German cars are the best cars in the world, so I don't think that the German car industry as a whole will be heavily negatively affected. Maybe it's just the decline in demand will come for some of those green investors that have seen Volkswagen as the number one sustainable car manufacturer, and that's why they were buying their cars. But otherwise, I don't see any major negative effect on the German car industry in general. Most people that I talk to here in France think that German cars are the best, and because I'm living in France, I'm completely unbiased, right? So I'm telling you that. So that's still the strength of their brand is still there.
As you mentioned earlier, there has been a debt and bond story on the markets of late, and stocks are poised for their worst quarter since 2011. Perhaps Q4 could see a US rate hike, for example, but all things considered, what is your outlook for the single currency?
Well, in finance, professors always say the same thing, that the best prediction of the stock market is that's going to go up, and I'm not going to change that now. Of course, there is a concern about that the Fed will increase interest rates. We know they're going to increase interest rates. Just the question is when. But that also seems to be kind of a widely exaggerated concern. I mean, they will increase interest rates when the prospects in the economy are good. But the prospects are good for the economy. That should be good for share prices. Therefore, expected profits will rise, although the discount rate will rise. But there are two effects that may cancel out with each other, and therefore there is no reason to be concerned of an increase in interest rates in the U.S. I find that completely kind of exaggerated. So I think people should be more concerned not about the discount rate, but about the cash flows, the profits of the company. These profits should basically remain high, and that's what's important.
Theo, great to hear from you. Thank you. Well, that's all from me for the moment, but earlier today, Sinead McLaughlin looked at some commodity currencies ahead of Friday's NFP report. So make sure you click back for that. Goodbye for now.